Hi everyone, we are from Group 9. Today we're gonna do present financial business report. This is our group member.
Pena Master Corporation Berhad dan Muhibah Engineering Berhad exemplify Malaysia's industrial versatility, operating in distinct yet equal vital sectors that drive the nation's economic growth and global competitiveness. Panda Master, a leader in advanced automation and smart manufacturing, support high-tech industries like semiconductors and electric vehicles, positioning Malaysia as a front floor of Industry 4.0. Meanwhile, Muhibah's expertise in heavy engineering, spanning infrastructure, marine, and crane manufacturing, underscores the country's capability in large-scale development and energy-related projects. Despite their differing domains, both companies share strategic strengths, including global crane reach, technological innovation, and alignment with government policies, enabling them to thrive in competitive markets. Their success stories highlight Malaysia's dual industry powers, cutting-edge technological advancement, and robust infrastructure development. Together, they demonstrate how complementary sectors can collectively enhance national reliance, ensuring Malaysia remains a key player in both high-tech manufacturing and heavy engineering on the world stage.
For Pentamasa, this two ratio was continuing to rise from 2022 to 2024. This cash ratio measures Pentamasa ability to cover its current liabilities with its most liquid assets, which is cash and cash equivalent. This own ratio has been decreasing from 2022 to 2024, which is time interest earned, fixed asset turnover, gross profit margin, operating profit margin, net profit margin, operating return on asset ratio.
Hi, madam. My name is Jayalashmi Yukaraja. My matrix number is A24A3180. So today I'll be explaining the debt ratio between Pentamaster and Moiva. So Pentamaster, the debt ratio in 2022 was 22.92%, and it slightly increased to 23.70% in 2023, and then improved in 2024 to 20.03%. And next we have Mohiba, where the debt ratio in 2022 was 47.16%, and it increased to 47.83% in 2023, but decreased to 46.95% in 2024. And if we compare, the debt ratio of Mohiba is like so much more higher than Petamaster. Even though like the debt decreased in 2024, it is still very very high, and this shows that the company is at risk. Now let's look at the gross profit margin of Mohiba, where the gross profit margin of in 2022 was 20.54% and increased slightly to 20.64% in 2023, and decreased to 13.82% in 2024. This could be because of many causes like failed projects and such things. But the lesser the gross profit margin, the more at risk for the company to fluctuate. So account receivable turnover by Pentamaster, this account receivable turnover in 2022 was 2.26 times and increased to 50.83 times in 2023, but it decreased to 9.93 times in 2024. Next, we have the total asset turnover by Pentamaster in 2022 was 51.86 times and increased to 52.50 times in 2023, but decreased to 46.09 times in 2024.
Time interest earned by Pentamaster Corporation Berhad. Pentamaster tie ratio consistently remained below 1. This means operating income was insufficient to cover interest expense. It raised concern about long-term financial sustainability. Time interest earned by Mohibah Engineering. Mohibah tie fluctuated, dropping to 0.10x in 2023 from 1.39 times. However, it rebounded to 1.72 times in 2024. This shows resilience and improved financial control. This data here is operating profit margin for both company, Pentamaster Corporation Berhad and also Mohibah Engineering. For Pentamaster in 2022, its margin was strong at 23.181%, but it fell to 18.56% in 2023 and 14.96% in 2024. And for Mohibah Engineering in 2022, their operating profit margin was 2.79%, which fell to 0.24% in 2023 before significantly improving to 2.58% in 2024. Here we have quick ratio for Pentamaster Corporation Berhad. From 2022 to 2023, the quick ratio declined from 2.76 times to 2.43 times, 43 times, and in 2024, the quick ratio increased to 2.66 times.
Next, all this ratio has been increasing from 2022 and to 2024. This trend indicates that Muhiba is successfully managing its financial resources stably by increasing the company's profitability and improving operational efficiency.
However, only this ratio which decreased from 2022 to 2024. It showed that the company could becoming more efficient in collecting payment from customers.
Master and Mohiba represent two contrasting yet critical faces of Malaysia's industry sector, high-tech automation and heavy engineering, but both face significant financial challenges. Master, while relatively stable, shows declining liquidity and profitability, necessitating tighter cost controls, receivables management, and debt restructuring. Muhiba, however, is in acute distress with crippling liquidity such as and unsustainable debt levels, demanding emergency measures like asset sales, debt swaps, and operational overhauls. Both companies must prioritize digital transformation, governance reforms, and strategy diversifications to navigate economic volatility. Penamaster's proactive adjustments could prevent further decline, whereas Mohiba's survival hinges on aggressive restructuring. Their future depends on executing disciplined financial strategies while aligning with Malaysia's industry and sustainability goals.
Pentamaster shall capitalize on its strong liquidity by equity financing, where new share to fund semiconductor expansion without increasing its 20.03% debt burden, retiring 40% of 2024 profit to automation R&D, issuing 200 million ringgit green bond for sustainable production line aligning with Malaysia ESG agenda. Mohiba must address its liquidity crisis through 500 million ringgit subsidy loans under Malaysia Natural Energy Transition Roadmap for renewable projects. Asset monetization, generating 300 million ringgit immediate cash. Strategy equity infusion by selling 25% stake to Khazanah Nasional for infrastructure (PPPS). Limitation of radio analysis. Historical blind spot in non-current diffusion. Example, semiconductor short distorting pentamaster inventory turnover. Accounting disparity. Pentamaster R&D capitalization, flat asset versus Muiba project expensing. Non-finance omission exclude critical wheel driver. Pentamaster 1.2 billion ringgit AI petition. Muiba political network. Current vulnerability 10% ringgit depreciation equal to 20% erosion of Muhiba 2024 net margin. Sectoral incompatibility rental benchmark misleading. Example, Pentamaster 1.36 fixed asset turnover is normal for its tech lab. Conclusion: Pentamaster must reverse profitability erosion through equity-funded R&D and green manufacturing, while Muhiba survival requires debt restructuring and strategic partnership. Currently, both companies must embrace digital transformation (ESG) integration. That's all our group presentation. Thank you for your patience and time that you've given to us.